Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, November 8th, 2010. Let's get right into the charts here and get started. Dow is down 46 points, NASDAQ down just 1 point, and the S&P 500 is down 4. Basically a flat to slightly lower day, which again can be explained simply by talking about the dollar. The dollar today is hovering to the upside ever so slightly. You can see again, this is where the dollar closed on Friday, and this is where we currently are trading today, right here. So again, a little bit of upside on the dollar. Remember, dollar inverse. Markets go inverse to the dollar. If dollar is higher, markets are usually lower or just slightly lower as we see them today. So again, going back to the charts, take a look. The SPY is hovering just fractionally lower after making a little bit of a sideways to up move on extremely light volume. Note the volume, folks. It's a Monday. Monday and Fridays are usually the lightest volume days of the week. There's really no economic news today to speak of. Nothing drastic happened over the weekend. It was a very quiet kind of recovery weekend after a major move last week. The SPY was up over $4 last week. That's a huge move of plus 3% or so for the week. Unbelievable move. Markets continue to be slightly overbought, but remember, as long as POMO is out there, and by the way, today is a POMO day, permanent open market operations by the Federal Reserve. That means they're infusing money into the system today. We heard about their $600 billion infusion that, again, was announced at the FOMC policy meeting last Tuesday, plus 35 million or 35 billion a month in additional, which again turns out to be about 110 billion of money put to work each month. I mean, that's huge. If you think about that in terms of amounts in history. I mean, it is rivaling World War II and the Great Depression. I mean, it's unbelievable, folks. And again, whether or not it turns out to cause inflation or massive inflation, we'll have to find out. I think ultimately it will, but that's something that the market will have to, and the economy and the Fed will have to deal with later down the road. Do I think they will curb it? No, I don't. Have they ever been ahead of the curve in anything they've ever done? No, they have not. So again, it's not a very optimistic picture for the future, but we have to live in the current period right now, which again tells us that money is being flushed into the market at record amounts, and that will most likely keep the market from having any major correction unless you get another shoe to drop. Another shoe to drop, what would that mean? Possibly a major default in Europe, something around the world, destabilization. That could really send everything for a tailspin. The Fed would not be able to control that with their money that they're trying to infuse in. But other than that, you have to say to yourself, if that doesn't happen, they can keep this market from really pulling back in a major way. Will you have small pullbacks? Of course. Institutions are going to take profits. People will take profits here and there. But will you have a major correction down 10%? It's unlikely in the short term, meaning in the next few weeks to a month or so. All right, let's take a look at a couple other things here. The spiders, as I said, very light trading. You gapped lower today below two trend lines, the 20 and the 50 moving average, gap down. You sold off. You came right into support. I called this support out to the chat room today. Great little call there. You bounced beautifully off of it for some good profits right back up. You retested it. You, again, could not break the 122. 122 was called by us literally weeks ago as a major level. You can see if you go back to last Thursday, right here, you hammered on 122, then finally broke above it. Then Friday, you stayed above it. Now you're hitting it on the downside and holding above it as well. So it was resistance here. Finally, you broke it. Now it's support on the way back down and continues to be a great little level. If you break 122, then you should be looking for a bigger move to the downside, possibly back to about 121.15 or so, and then the 200 moving average below. The interesting thing to note here, folks, again, the volume is dead today. Take a look. Even in the opening minutes of the market, or the 10-minute periods here, the volume was light, but it's only gotten lighter now. And again, you generally anticipate anytime the volume is this light, they can probably, especially with POMO going on, permanent open market operations by the Fed, they can probably get this market right around the flat line, give or take, into the close today. All right, again, a couple stocks I'm going to go over in a little while. I'm going to give you guys some ideas for trades later in the day. Some stocks are beginning to move that I gave to the Research Center already via the Pro Trader watch list. That's great to see. And again, I'll give you those in just a little bit, and you guys can play them along if you happen to want to towards the afternoon session. Spiders, again, if you rally to the upside and take out these moving averages, by the way, you do have a small in spirit of bull flag here that could tell us that gap fill would be a play later today. And if you take that out, then double top right up here. For those of you in the Research Center, remember, there's no confirmation of the break of 122 today based on the daily level, so just keep that in the back of your minds. We'll watch later today to see how that plays out. Dollar, again, as I said, is higher today. That's why the markets are fractionally lower. But on a Monday of light volume, I don't really expect much on the downside in the markets. Take a look at gold today. GLD is up slightly, continuing to rally. Gold just, again, a non-stop run here towards the 140 level. I think 140 is a very optimal or area of major resistance, but it could easily get to 140 as we continue to rise up here. Doing a quick check on spot gold. Spot gold, again, continues to hover here, down slightly on the day, but it rallied quite a bit into the close or on Friday. But nonetheless, we are seeing, I'm just looking across the board, it's right around the flat line, give or take a little bit here on that. Let's take a look at the USO. USO is the United States Oil Fund ETF, trading down slightly, but it has come off the lows as the market's been floating up, so has the USO. All right, let's get into some stocks, guys. Everyone wants to know what stocks to play later today. Let's focus on them right now. One stock that I gave to the Research Center not too long ago, STEM. I gave it right down here, right around 89.90 cents. Look at the move already, folks. It's only at 92, so there's still a lot of upside. STEM, to me, is a breakout play here, and I'm going to explain why. Take a look at the daily chart. Good consolidation here. Good move up off a base. Good move up. Consolidation. 200 moving average is probably the target, which would be right around $1.02, $1 on this play. If it gets through that, it's probably going up to this level at $1.20. Could easily get there, and I'll tell you why. Take a look at ASTM. This is kind of the sympathy play to it. Look at the chart on ASTM over the last 2 weeks. The stock was trading at $1.50. It is now at $3.35 today. So 100% move in the last 2 weeks, or more actually than 100% on ASTM. That's another stem cell play. These stem cell stocks are getting hot. So again, you have to figure with the pattern on STEM, there's a good chance of a move over $1, probably to $1.10 or so on this, easily piercing this 200 on the upside. And again, I do think that STEM probably heads in that direction over the next few days, if not even today, towards the afternoon session. What are some other stocks to keep in mind? A couple 2 months ago, 2 hidden gems ago, I gave out this play. I gave this play out at approximately $2.37. This is BSPM, Biostar Pharmaceuticals. I gave it with basically a 50% target return. Guess what, folks? Look at this chart. From $2.37 to $3.51 now. Unbelievable move, basically a 50% move to the upside there on that hidden gem. Hidden gems are released once a month. There's a new hidden gem out there, and again, that's already up nicely for those of us in the Research Center as well, trading well up from the levels of the announcement. All right, and again, a new hidden gem will be coming out every month. They even feature other small caps in the hot charts and alerts. Everything's included in the Research Center, by the way, everything except the chat room. So just remember, if you go to that Research Center at inthemoneystocks.com, everything listed under there is included. There are plays daily usually. There's usually a new addition to the hot charts or the Pro Trader, or a new hidden gem once a month, or the videos come out every night, 30-minute videos. So it's just a ton of information where we're giving out ideas on what to play in the markets, where to position yourself, how to read and educate yourself on the technicals that we have formulated, our proprietary technical analysis techniques. It's all included there, and again, at inthemoneystocks.com at the Research Center. All right, let's go over a couple other plays here. I'm just going to scan down my list as we kind of continue to look here. NASDAQ 100 stocks are doing the best today. If you take a look at Apple Computer here, AAPL, Apple's up about $2 today. Also, if you take a look at Amazon, Amazon's up $1.71. If you take a look at BIDU, BIDU, up $2.15. Now, the reason why NASDAQ 100 are doing so well today, folks, is POMO. POMO, it's been kind of rumored or said that when the Fed pumps money into the system, it directly goes to the NASDAQ 100 because those are the stocks that keep the market up the most. The Dow, again, yeah, it'll keep, you can focus on the Dow stocks, but the Dow stocks, as long as commodities are rising, the Dow stocks are really, contingent on those commodities. So as long as the Fed's pushing down the dollar, you don't have to prop the Dow stocks up. They'll go up as long as the dollar is weaker and commodities are going up. But the NASDAQ stocks are the other key. So that's if you're going to focus on a sector or an area of the market, focus on tech stocks, NASDAQ 100, and that's how you really keep the market from collapsing. At least that's the thought process of the Fed right now. And again, we see it day in, day out by looking at some of these stocks. I mean, look at the charts of some of these NASDAQ 100. This morning when the markets were at their lows, many of these NASDAQ 100 stocks just started to take off, and it just kind of proves my point that that's where the focus is. Look at right here. Early on, down, and then all of a sudden POMO comes in at 10 o'clock and lifts these type of things up. Look at that move up on Amazon. I mean, it just changes direction on a dime and rips to the upside. So again, just keep this stuff in mind. I think it is very important. Apple Computer up pretty much from the start of the day. Take a look at BIDU, BIDU here. Let's take a look there. Look at that. I mean, just constant movement up. Very, very strong in the NASDAQ 100. And again, that's really where the propping most likely will come in because it's at the best benefit at that point of interest. All right, that point of touching there. All right, what else do we want to focus on? China stocks are having unbelievably big days again today, folks. Let's take a look at CCME. Take a look at this. Was up much more at the open, but still up $1.38. CHNR, China Natural Resources, up $1.48. I mean, all these $10, $20 stocks all up $1 and change today. As again, China is just so hot right now. I remember about 2 months ago when this rally just started, I said to everyone, I said, buy the Chinese stocks because that's where the growth is going to be. If you're going to have good growth or big growth, it's not going to be in the U.S. It's not going to be in Europe. It's going to be in China. They're going to have the leading growth edge. And again, I highlighted so many stocks back then, and that's why the hidden gem a couple months ago was a Chinese play. And pretty much every play since then that I've done on the small cap has been in that Chinese area. But again, you have to remember Chinese stocks, their growth there, they're trying to make sure that their growth is around 10% or a little less. Here in the U.S., what is it, 2%, 1%? You know, I mean, in thought process, if you think about it, that's where the no-brainer growth is going to be. So that's where money should be or should have been positioned, as I talked about not long ago. So again, some interesting stocks here. I'm still watching CIIC. I still think that's a no-brainer here. Beautiful chart. Any sort of squeeze, and you'll see a major squeeze come in on that play. CIIC, China Infrastructure, dead lows down here. Again, keep an eye on that one. That could be the next big runner. Talk to you guys soon. Take care.